Welcome back, all. It's Tech Tune Up with me, your host, Paul Meeks, specifically April 22, 2025. Lots to talk about today, but remember, so cue them up. I take your questions near the end of the telecast. Look forward to that. So I'm brought to you, as always, by my good friends at Benzinga. Check out their Benzinga Pro Tools. I use them. And also, where I manage my tech portfolios down here in the Bayou in Charleston, South Carolina, Harvest Portfolio Management. So let's get to it with the stock tells. Hopefully, I introduce some ideas that are not just regurgitating the news, but how they really impact said companies and even more broadly. So first, I'd like to talk about Uber. I find this very interesting that the Federal Trade Commission has sued over the sleazy way, at least purportedly, that Uber makes people sign up for Uber One subscriptions. The other thing about Uber that's in the news that's maybe a little less higher profile is that the hedge fund titan, Bill Ackman, who took a really big contrarian position in Uber back in February, recently took a equally contrarian position in Hertz Rent-A-Car. And of course, because he owns big stakes in both companies, he's trying to quarterback a partnership between the two. It could happen, given his influence and his reputation, and it could actually be really interesting for the Uber story. And I think probably, if and when announced, overwhelmingly positive. The next is Google, and Google continues to be absolutely besieged by regulatory issues. And now we have a federal judge working out of the state of Virginia who has now joined forces or concurs with the Department of Justice that Google holds monopoly power in digital advertising. This could easily, over time, force the company to not only divest some of their advertising tools, which really dominate the industry, but I can imagine a world in which they're also forced to divest YouTube. And remember, some of these cases were started either during Trump's first administration or during the Biden administration. But regardless of when they started, they're being continued and maybe even upping the ante against these companies. And this is very interesting because the heavy support that Trump received during his campaign from these technology companies, you would make you believe that he would turn the other way and maybe be more supportive. But no, I think that these early campaign donations from Silicon Valley, Mark Zuckerberg at Facebook, et al., they're probably a little disappointed and a little frustrated as to the way things worked out. So next, Meta. Meta's actually on trial with the same cast of characters, the Federal Trade Commission. And I also see a world in which Meta might be forced to divest both WhatsApp and Instagram. WhatsApp was bought in, I believe, 2014 for an all-in price of about $19 billion. It's been hugely successful for Meta, even more successful. And I would put it in the pantheon of some of the greatest tech deals of all time is when in 2012, that's also when Meta went public, they bought Instagram, which has been a huge home run, and they only bought it for $1 billion. Probably not a better deal in tech history, or actually at least one of the best. I'm a little bit worried about Amazon as we roll into earnings. You know, Andy Jassy, the CEO, gave an interview recently, I think I talked about it last time, in which they're still committed to fairly aggressive spending on AI infrastructure. But at least one firm on the street, and it's not echoed by the company yet, but seems to be a pretty strong rumor. And I believe the firm in question is Wells Fargo. Their analyst has reported that Amazon is canceling some data center leases, or at least delaying them. We also have heard the same thing from Microsoft. It'll be super interesting and super important when these hyperscalers announce their quarterly results. So this is coming down in a few days. What are they going to say about their AI infrastructure spend for the rest of 25 into 26? Are they going to reiterate it, which they did last quarter, or are they going to drop these budgeted amounts? Now, Nvidia has already backed down to below 100, so maybe it doesn't go any lower, but obviously that'll bring back the cries from the bears that AI infrastructure spending is dead, AI infrastructure spending has topped. We'll see. In the meantime, and I'll show you in my stock picks in a minute or two, I am sticking with a smaller group, mind you, that I originally had, but a group of who I think are going to withstand this punishment and still come out strong with the AI infrastructure trade. So we'll see. Quarterly reports, man. This season is what we like to call them, is going to be iffy. We've only had one marquee name, and that was Netflix last week. And that was so great that even though I had a big position, I bought some more after earnings. But man, pressure will be on, particularly for the consumer electronics companies that are going to have to address their additional costs with the Trump tariffs and all kinds of other squirrely things going on. What I tell you is, yes, the stocks that you love, the stocks that I love, some of them are down way off the top. But why would you go in and even attempt to buy a stock lower to catch a falling knife when these companies are going to be announcing earnings in just a couple of days? Please wait until the news clears. Wait until the news clears. This is not a tech stock, but it's a tech tell. Johnson & Johnson, the big pharmaceutical company, made an announcement that it's actually going to pull back on some of its AI projects. It's finding it difficult to find AI use cases. So they will use AI, but it's not going to take over their enterprise. And remember, one of the great catalysts, one of the purported great drivers for the AI trade was going to be healthcare. And of course, we're getting maybe a little bit of pullback. Maybe it's only temporary, but it's a negative sign nonetheless from one of America's, in fact, the world's biggest pharmaceutical companies. I think OpenAI's announced purchase of Windsurf for about $3 billion is interesting, because here is where we don't have a problem finding AI use cases, because Windsurf is a AI software coding assistant. That has been one of the successful early AI use cases, and OpenAI is putting its money where its mouth is. It's ponying up $3 billion. They see the opportunity. It's not in the future, it's in the here and now. So I like that bit. I like that driver. Next, since we last got together, Taiwan Semiconductor announced their quarter. And of course, they are the semiconductor outsourced manufacturing for the dream team of the most sophisticated semiconductor designs in these United States. And they had a really good quarter. And they stuck to their guidance despite all this tariff madness. But the street did not give them much love after they reported that quarter. So it makes me worried that we step into quarterly earnings season here. And even if companies say and do all the right things, some people are going to continue to be skeptical, and maybe it doesn't matter if they have that positive surprise. Maybe it doesn't matter in their guidance if they guide to a beat and raise. A little bit distressing. Next, AMD. You know, I've always preferred in the AI infrastructure trade, Nvidia. I think Nvidia's manufacturing and design lead over AMD has increased, not decreased. And AMD, pound for pound, even though it's a smaller company than Nvidia, is going to get hit much worse than Nvidia on these Chinese tariffs. ASM Lithography, super important global tech company, one of the most important in the world, actually, because they dominate the manufacture of extreme ultraviolet semiconductor equipment that is used by everybody to manufacture the leading designs. It's a Netherlands-based company, but obviously it has hooks all over the world. But unfortunately, TSM was a good tell, I thought. ASM, well, they actually missed their expectations going forward for their bookings or their orders. And in his commentary on the quarterly update, their CEO gave a worst case scenario and a best case scenario for this year, which was so wide between those two endpoints that it makes me think that nobody's going to be able to give guidance with confidence. You could run a truck through that guidance. It was almost no guidance. It's just, oh my God, world is uncertain. Stay tuned. We'll see. I think Nvidia is playing a game here. People were very upset, the other day when they announced that they took a $5.5 billion inventory charge for these H20 chips that were being sent to China. Of course, now they're export restricted. And so they took that hit. That obviously is not a good tell for what they're seeing and how they're going to absorb the Chinese tariff blow. But as you know, a couple of weeks ago, they did announce that in the next couple of years, they're going to spend $500 billion to build a AI semiconductor grouping here in Texas, in these United States. Probably did this to appease the Trump administration, right? The whole part of these tariffs is let's bring the manufacturing back home. I don't think it's necessarily a good move for Nvidia fundamentally because their claim to fame is the design. I don't want to see them manufacturing. Don't want to see them doing it, but they might have to appease Trump. But on May 15th, which is only in a few days, the Trump administration should be giving us some clarity on the AI diffusion rule. Let's put that in quotes. Everybody knows it's coming. Nobody knows what it is. Probably not even Trump's posse at this point. But anyway, it's something to look forward to. And I think Nvidia is trying to get ahead of that threat by appeasing the Trump administration. But anyway, it's going to be probably pretty big news. And that's coming on the 15th of May. And lastly, we'll see what happens with Apple. Apple is probably the largest cap U.S. tech company that is the most negatively impacted by these tariffs, right? Not only do they sell a lot in that market in China, but they also manufacture essentially everything there. And so, you've probably read the stories like I have that to try to evade these tariffs, they have airshipped, and that can't be cheap, man. Airshipping a couple of $1 billion of iPhones from India to get around the Chinese export controls and the tariffs. Anyway, that is a really bad sign. Think about the explosion in their cost to transport stuff here. I expect them to be pretty dour when they announce their results in a few days, particularly with their guidance going forward. How could they possibly avoid any of this stuff? Bad news. All right, let's get to my buy list. As always, companies in green, I have the balls to buy them right here and now. In the yellow is my watch list. And of course, these days, what am I watching for? I'm watching for what they say in their quarterly conference calls. And I'm not going to buy a share before that because it's obviously dicey. And I only have to wait a few hours for the news. Sometimes I make a call on stocks if I have to wait a month or so for their quarterly reports, but this is right around the corner. So why don't you just wait for the next quarterly data dump? So you see the stocks that I've been buying. I've talked about these. Robinhood made a good call, a nice bounce off its 200-day moving average. Palantir, not inexpensive, but I do think it's relatively insulated here. Netflix, I mentioned, after their quarter last week, I already had a decent position. Now I have a bigger position. T-Mobile, I've been playing chicken shit, hiding in that stock, but I will tell you, T-Mobile announces their results in 2 days, and I would definitely wait for that. And also in the meantime, we got a pretty nasty quarterly report from Verizon. Now, T-Mobile is a much more focused, much better company than Verizon, but I don't know. That might have been a bad tell. Take-Two Interactive, done well there. We're getting ready for the fall release of their big software. I'm not afraid to say I'm scared. And so I bought not the gold miners, but I bought the gold ETF, GLD. Been hiding, as you may recall, in Duke Energy. Why am I an electric utility? Don't really give a shit about Duke Energy, but I'm hiding there. The drug distributors, I own not one, but two, but three to play defense. And also CoreWeave. Remember, I invested in this thing as a private company. I think CoreWeave is going to surprise to the upside. I think the stock's going to get a bounce. It's been pretty depressed since its IPO. Today, 5 or 6 Wall Street firms came out with their initial recommendations and price targets. And right now, I think there's 6 or 7 companies reporting. The price target for CoreWeave is only $47. They went public at 40. Of course, now the stock is in the 30s on this drop. I think that their $47 average price target is way too low. I think there's an opportunity there. And yeah, I would, it's going to take some courage, but I would buy some CoreWeave. So let's finish up with some of my tech friends. Let's watch rates as we always do, because when interest rates go down, the prices of aggressive growth assets go up, and that's what we're invested in here primarily. So the CME FedWatch tool tells us that the Fed will likely do nothing with rates at its next meeting, but now it's up to a 65% chance at the meeting on June 18th that they will lower rates by about 0.25%. Now, you've seen that very nasty back and forth between Trump and Fed Chair Jay Powell. I don't know how Jay Powell even bites his tongue, because remember, Jay Powell became the chair of the Fed because Trump nominated him during Trump 1.0. So it is a strange turn of events. And I will tell you this, if the Supreme Court allows Trump to fire Powell, that would be really, really bad, whether you like Trump or not. When our trading partners, particularly our allies, see that U.S. monetary policy and the financial system is now solely controlled by the executive branch without any checks and balances, if he fires Chairman Jay Powell, we could have a crisis, and we could have a crisis in 2008, 2009 proportions. The market could get hammered even from this level. So if you feel that that's going to go down, Katie bar the door. We're in a lot of trouble. The only thing that will save us is cash. So we'll see what happens. The tariff uncertainty obviously is front and center. Maybe we get a little bit clarity as to how exports into China from the United States have been impacted, and how's that going to trim sales. And then, of course, the big one is, for these companies, particularly the hardware and semiconductor suppliers, consumer electronics, what are their costs going to be at the end of the day with these on again, off again tariffs? So anyway, unfortunately, right now, the geopolitical, the global trade war is probably front and center. And it's frankly probably most important to stock investors than anything specifically about the stocks. Right now and for the foreseeable future, macro is more important than micro. Macro, the big picture stuff, more important than almost what any company is doing individually on the micro side. We'll see. So what do I tell you? I've given you a couple of stock picks. They've been pretty good. They've been relatively defensive. Some of them are actually up when the NASDAQ is being crushed. But overall, I'm still on a buyer strike. Maybe that changes in the next couple of weeks as some of my companies report and they can quantify in their guidance the tariff impact. But think about it, you guys. If the market's going down, at least to some extent, the tide is going to sink all the boats. So don't stress about it. Try to, as I do, either build a cash hoard, play defensive names like my Duke Energy, the electric utility, and try to focus on which of your tech stocks is going to have the biggest bounce on the other side. I don't know when the bounce is coming, but I'm going from a pretty broad swath to a really focused list. And yes, I still own a shitload of Nvidia. That is on my focus list, but I have had let some, of the other stocks go. So anyway, those are my thoughts. Sorry to be a bearer of bad news, but I'm just being honest with you. Sometimes I go on other networks and the producers are telling me to be upbeat and give stock picks and stuff. Right? I'll protect you from keeping away from that. So anyway, if you have any questions before I sign off here, please let me know. What are your views on Hertz? This is very interesting. As you may know, I'm down here in Charleston, South Carolina, and I'm a professor at the Citadel. And I was part of a group that invited Bill Ackman to speak. And Bill Ackman actually came last week to the Citadel in sleepy Charleston, South Carolina, and spoke to our students. Actually, it was a group of about 300 people. It was a rock concert. But he went through, while he was there, his purchase thesis on Hertz. And so I'm very interested. And I'm also particularly interested, as I said earlier, about the potential partnership between Hertz and Uber, both Bill Ackman companies that he's invested in. So I'm not going to buy a stock after it has already bounced over 100% from its bottom. But I'm going to keep an eye on Hertz, and I may buy some on any dip. But please, even if you like the thesis like I do, you can't buy a stock after it's already moved so much. But great question. Any thoughts on, is that Honeywell spinoffs? I imagine you're talking about Honeywell. One of the things that has happened to great success is General Electric, right? Which was a sleepy, old, mature, crumbling, at least one time iconic manufacturing company here in the States. Larry Culp, their CEO, went in and did a nice job of carving that up into value-added pieces. And what we found there with GE is that the parts individually were worth much more than the whole. So I imagine that Honeywell, of course, they've already talked about it, will do the same thing. And I like it because what happened was some of these companies came to the dance years ago when in the 1960s and 70s, the most popular form of corporate structure were these conglomerates, with the idea being, let's not put all of our eggs in one business basket, let's spread it around. But what we found over time, that was a failed model, particularly for the 21st century. And now we want focused companies. And so I applaud all of these spinoffs of these industrial companies like GE and Honeywell. The thing that freaks me out a little bit is what I think are going to be the regulatory force spinoffs of Meta and Alphabet. Thanks for sharing your investment advice. My pleasure. Thoughts on VRT? Nothing new that I haven't shared before. I can take a look in it for future broadcast. Let me know if you want me to follow up. I'm super easy to find. What's a good entry point for Webull, if any? Did you misspell it? Because I don't know the company. I'm sorry. Tesla. Well, Tesla, I'm definitely not buying ahead of tonight's earnings report. It could be really grisly. And of course, the brand has been really tarnished, whether you like what he's doing or not. But just Elon Musk's continued involvement in Doge. What I'd like to hear, and I actually spoke to another networker this morning, is I'd like to have Elon put out there that at some date, let's be firm about it, that he is going to step away. The Doge stuff will be done. Maybe it's a success, put it behind you, but he's got to get back to running his companies. And I am not really interested in the EV business. I think it's going to be problematic for as far as the eye can see. I will believe the autonomous taxi when I see it, because Musk has also been talking about that since 2015. But in the meantime, you know what? A couple of years ago, that stock was 140. It's still 100 points higher than that now. And when that stock was trading at 120 to 140, actually, its fundamentals were better then than they are now. So please do not buy it ahead of the announcement. And you know what? Almost no matter what the company does and what Musk says, I'm not going to buy it afterwards. Anyway, the key being nothing to do fundamentally with the business. The key is getting Musk reintegrated in the business. When does that happen? Don't say it may happen in the future. It's got to happen soon. The company's in trouble. AppLovin trading at 25 times revenue and 55 times PE. App is a tech company at a premium, right? Well, we'll see what happens, right? There's a number of people that have the bearish view on AppLovin. You've seen all the short reports. They started filtering out on February 26. I have a small position. I don't have the balls to buy any more at any price, but I think they are going to surprise you to the upside on their next report, because as they migrate into e-commerce ads versus essentially what they were doing was just ads and support for mobile gamers, I think you're opening up a really large potential total available market. And they do have, despite what the short sellers say, I do think they have some pretty elegant technology. So I'm not going to buy it, but I'm not going to sell it either. And let's see what happens when they report. Should be not too long now, within the next month or so. And I think they are going to really surprise you on the upside. Is Google recession proof? And this will be the last question I take. Unfortunately not. So Google is one that I have not promoted among the Mag 7 for some time. So we talked about at the beginning of the forecast, Google is under antitrust threat from US states in various proportions and also from the FTC. So unfortunately, distracted by fighting that stuff. And it's going to be a multi-year fight. It's not going to be resolved anytime soon. But if we enter in a recession, and I think as long as the tariff confusion continues, every day we step closer to a recession. I mean, today the International Monetary Fund took their estimate for our GDP growth this year from 2.7% to 2.8% to 1.7%. That was a big cut. Any more cuts, we're getting pretty close to GDP 0 to negative, and that's your recession. So both Meta and Google, and probably particularly Google, because Meta has some other drivers. Their business is built on digital advertising. And if we have a recession, even though digital advertising will continue to take share from linear advertising budgets are going to drop. And this will hurt the company, right? They won't lose any digital advertising share to anybody, but the pie is going to shrink. So unfortunately, Google, not recession proof. And that's why I'm staying away from it. So you guys, thank you as always. Please like me. Please support me and Benzinga. And we will see you next week.